It's Louis here, and I hope you're all well. We're looking at Quant today on the weekly time frame, taking a closer look at the weekly close. And if you do enjoy this video, please like, subscribe and comment and share it if you can to get this out to the Quant community. But you can see we've actually run into the 69 EMA. If you're not using this, if you're not aware of it, then if you're using the 50 or the 55 EMA at the moment, it would look like that we are above it. Do not get overconfident because we still have this inverse head and shoulders neckline over here which we're attacking. We're still under it. We did not close a weekly candle or a daily candle above it. If we had done so, then we'd start this journey back to actually reclaiming this $150 level, which I gave you as the key support, which we couldn't lose. Otherwise we'd be validating this nasty head and shoulders that not many people wanted to believe at the time, but in the end came to fruition. Now I'm telling you guys to focus on the 69 EMA because although you might not be using it and you might be thinking, oh, we are above the 50 or we're above the 55 EMA. In actual fact, we're not above the 69. So don't expect that we're just going to fly out of nowhere. This is still key resistance. And you can see it's from around 117 to about 125. We're now obviously a week later. So it's dropped down $2. So around, well, $1, 124 we'll say. So that's where we want to see a weekly close above. As the weeks go on, you can see it will get lower and lower and lower. The close, the weekly close that we need to see. Yeah, we would just need it to see it above, obviously closing above this, but as the weeks go on, that price goes lower basically. And so going forward, if we take a look at the daily time frame right now, as we can see, we're at some key resistance, and it looks like this a bull flag or bull pennant, sorry, so to say bull pennant because it's more like a triangle over here. We're seeing some continuation to the target. This key resistance. So it was nice to see over the weekend we did actually come up and tap this resistance, basically confirming that this line isn't pulled out our bum. We rejected it and we had this line before we rejected this point. So it's nice to see that our lines are valid because it's funny because I was seeing on Twitter some people saying random shit about my line, saying, oh, don't get caught off guard because you're drawing them through the bodies and not the wicks. It literally does not matter. Mate, if I'm drawing on the bodies, I know, okay, I need a body candle close above it and we're going up. Or if we're above it and we see a body candle close below, we're not going up. It's as simple as that. It doesn't matter if your line's on the wick or on the body, honestly. People, come on, guys. But anyway, we'll carry on. And yeah, we know to stay bullish, we need to stay above $83 support. Since we were looking at this area over here, there were two potential scenarios that could have happened in this area, but we were also noting that there are some bullish signs. Although there are bearish patterns forming, there could be a potential bullish one. And then of course I was telling you guys that holding these EMAs is bullish, and so that's if we do run into any resistance, it's going to be around $120. So the bearish pattern we were seeing was a shoulder, head and shoulder. And if we were to ever have lost these EMAs and come back down to the support over here and lost this, you can see we would have validated this pattern all the way back down to this double bottoms neckline. And we were making you guys aware that because it had never been retested as support, it can be confirmed as support. However, because it never has been, that is a potential reason why you could actually fall through all the way back down to $50 psychological support. This is the higher low that at all costs cannot be lost. Okay, so this is what's actually like, this is the pivot right there. That's the pivot point which sent us bullish, guys, because we were losing this key support over here right there. You reclaimed it and confirmed it as support. So that is my pivot point. That is where everything flipped bullish at that right exact moment with a bullish hammer, that green candle. Now, yeah, going forward, you must remain above that to stay bullish. So that's the first low. Then the second is this. Stay above this and you're bullish. So having Quant holding above 50 and even 83 is bullish. And that means we should actually see further upside. We should attempt to break resistances. It doesn't mean that you will, but it's going to give you chances. As long as you're above these levels, which are keeping you bullish, it's going to try and break out bullish. Doesn't mean it will. It's going to try. So when I mean it tries, it's going to try and break resistances. But resistances are the top of the market. So here, a clear resistance right now. Resistance is the top of the market. So this is where you should fall, because if it's the top, you can't go higher. So at first we need to reject it, come back down, and then take it out. That's what we'd like to see. You might be thinking, what the hell? Well, this is what we see on the left over here. Look to the left, structure these clues. You can even see it over here. This is resistance. This was resistance as well. You broke above it, so now it should act as support. But we need to run into the new resistance first to then fall back to support. Do you see that? So did we break this resistance on the first attempt? No, we came back, found support on the previous resistance, and then went ahead and broke that. What you should now do is hold support over here, fall back right here, and continue. But if you were to ever lose this, you come back to this low. We eventually came back to that low. As simple as that. Now over here, you can see you're under the EMAs right here. You should actually continue lower. But somehow something is keeping you bullish. What is keeping you bullish? $83. So this is why I'm telling you guys, as long as we're above $83, this is bullish. And so we came all the way down there, and that is where we bounce from. Because if we're staying above this level, and if we're bullish, if we're coming down to it, why are you getting frightened? If we're above it, we're bullish. And if you're coming down to it, you're still above it. So you shouldn't be expecting, oh, because you're coming down, you're going to break it. No, this is support. So the support, by definition, just like up here, resistance is the top of the market. You should fall, just like this was a resistance and this was. And that's why when we first ever touched it, we went down, we went down, we went down. The first ever attempts. So this is what should happen also at supports. So when we fell back down to here, this is why we got this initial bounce. And the fact that we reclaimed this EMAs, as I was telling you back then, this is bullish. And I want to see a daily candle close above this wick, $116. I just want to double check we did that. This closed 116, so not really. It's on it. I want to see it above that. So going forward, another daily close above 116 is what I want to see going forward. Otherwise, yeah, we're going to try and actually roll over, and I want to see this held. Of course, if it's lost, you're coming back down to this support over here. So you want to hold the resistance, now support right here. But if you lose this, you go to level below. So just like here, we broke above. Where you should find support is here previously. But if you ever lose this, you come down to here. That's what's happened over here. Okay, as simple as that. The head and shoulders pattern never became valid because you didn't come back down to the neckline and close below it. That's what you need to do. So if you're new to trading, if you're new to the market patterns, and all you've been seeing, oh, this guy's talking about this head and shoulders pattern, but he's not really explaining. If you're seeing other YouTubers talking about head and shoulders and they're not really explaining it, well, basically something that I was never personally taught, even though I had multiple courses and mentors, what I had to work out myself, is that patterns are not valid until a certain point. Or also something that I wasn't taught was patterns, let's say a bullish pattern in a bearish trend, it might not work. It might work in the short term, it might not work at all. So these are the things that we have to be careful of, and you're going to see that with your experience over time in the market. But because, yeah, you'll just notice the manipulation. But yeah, we didn't break this $83 support. We didn't come back to validate this head and shoulders pattern. And the bullish pattern, which I left you guys off was with that potential W pattern, and I drew this fake downward movement so you could see it a bit better. Can you see that now? So it's much clearer. All the W pattern is I've come into support twice, double bottom, one bottom, two bottom. So that's a double bottom. And what we now need to do is close above the neckline in and around $130. And that would give us a technical target. If we can actually close above 130, it'd give us a target out about $190. You can see by the time we're up there, we're above this bear market level. That's bullish. We need to confirm that as support, which is the point where we'd actually turn this green and say, wow, this is definitely not bearish anymore. It's the go signal. We don't have to stress about anything. Literally just buy and forget about it and wait until we're beyond the all-time highs. And any buys below the all-time high is amazing. Any buy above the all-time high is a highly risky move or investment or whatever you want to call it. Because yeah, you just look at previous markets and you'll see that. So if you go back to the Bitcoin chart and you started buying up here, you're back at where you were basically. So investments below the all-time high is going to be beautiful. Now going forward, the same thing. Anything below this is beautiful. Anything above that is going to start to be risky. So this is the moment where you want to start investing. Yes, if you watch my Bitcoin videos, we could go down here. I've also spoke about the worst cases for Quant as well. We can't lose $14.5 or $16 or something like that. But yeah, step by step, follow the Bitcoin videos. There's specific levels I'm saying we do not want to lose. And as long as we're above them, we're bullish. Lose them when we're bearish. And it's the same for Quant. But Quant is a little bit ahead of everyone else, ahead of the pack. and it's holding up nicely. Remember, Bitcoin is basically stuck down here, while Quant is a level above that, so to say. So that's pretty nice to see, and I hope you guys the best of luck going forward. Let's see us now come back down, hold this support, and continue and try and break it. Again, if Bitcoin loses the support, and I urge you guys to check those videos out, and if we're ever losing $83, we know where we're coming for. We're prepared. And if that doesn't hold 50, we can't lose 50 whatsoever. That's how we know the bottom's not in, if we're losing 50. But precursors are, okay, if we're losing 83, we're losing this level, we're losing this range. So we're no longer, in this range, we're below it. So technically it looks like you went into it and back below. You got pushed into it and you got spat back out. So we don't want to fall back under 83. It's not a good sign whatsoever. But yeah, that's it. I'll be here step by step, and I'll catch you guys in the next one. Peace.